Some insights in the news shaping the markets and maybe even another rate hike. Ben Emons, Senior Portfolio Manager, Head of Fixed Income Macro Strategy at New Edge Wealth. Thank you for being with us. I read your note last week. You even put that back on the table, didn't you? Did you put that as a maybe? A 0.1% chance? I don't know. Is there a chance of another hike from the Fed?
I think, Nicole, if we're going on stay on this track with the economy, then there's a possibility because one, they've never taken that option off the table. I mean, they've always said, like, if we need to revisit the rate hike, then we will, because if inflation does not really get to that target faster than they expect, then I think it's possible. On the other hand, we have an economy that's not maybe the same as what we had in, say, 2021 and 22, when inflation really started to pick up so quickly, so fast because of the pandemic. So I think this Friday's number, PCE data, will be a little bit hotter because that's what happened with CPI and PPI. And that probably keeps the Fed just simply, for now, on hold. But when you're on hold, and if inflation then continues to start like perking up, so to speak, yeah, the possibility of a rate hike becomes a bigger one.
Today we have utilities to the downside. Energy is the winner today. Consumer discretionary, another leader. This as the markets have been hitting new highs. I mean, last week we saw record highs for the Dow, the Nasdaq, the S&P were up 15 out of 17 weeks. A lot of bullishness I'm hearing. How are you feeling?
Yeah, we definitely think it's a momentum market. It's not like something that's just after 1 week going to completely fizzle out. And to your point, like, technology is really taking the charge, and it's actually to degrees pulling up other sectors. Now, what was interesting from the Nvidia earnings, Nicole, was that they were really talking about how their AI technology is being adopted in different sectors of the economy, whether it's healthcare, automotive, or retail, or financials. And they even highlighted some companies that are adopting their technology. I think this is why you saw this, what I call a careful rotation emerging. And in other words, you saw stocks like Home Depot, Walmart, and American Express, and United Health will start a rally. I think because people look at this Nvidia story as in that's the real big leader of the market. But underneath, if they're having an effect on the economy and get wider adoption of AI, then you're getting other stocks rallying. So I think it is a bit of a momentum market with a careful broadening.
Yeah, understood. So for investors, what's your advice to investors now?
Well, one, this is a market to stay in, obviously. We do think you can be to an extent offensive because if we're really in a momentum market, there's no reason to really step out of it. We do like healthcare, for example. We do like energy. Those are two sectors we favor. They've not done well. They've very lagged. So it continues to be a value opportunity. Noted that the gap between growth stocks and value stocks is really, really wide. So there's naturally, I think, an attraction there from a valuation standpoint. And then it's about diversifying elsewhere, right? So emerging markets is getting back into focus. I think I've mentioned before on the show that emerging market bonds are interesting, but also on stocks, because look, since the start of February, China finally shows some recovery. And we know that countries like India have already been a really strong contributor to emerging market performance. So we're taking a good look at emerging markets as well as an opportunity.
I wanted to ask you, I saw something from Piper Sandler, just from Nancy Lazard, talking about that the soft landing is possible, but it's reliant upon fiscal stimulus. So the forgiveness of student loans, tax cuts, other policies, which in fact could be a boost to GDP this year, maybe even a 1.5% boost to GDP. I was curious to hear your thoughts.
Well, she has a really good point. And in fact, actually, is that the spending that's happening currently is so enormous. I've calculated this is in the hundreds of millions of dollars a day that are being, basically pushed into the economy through the different acts that are currently happening: CHIPS Act, Infrastructure Act, Inflation Reduction Act. And no matter if there's a shutdown of the government, that really doesn't change anything of the spending that's happening. And to her point, Nancy's point, is that probably, if we're getting a different president, we'll likely get tax cuts. That is more for 2025. So fiscal stimulus plays a big role. I would always make the point like it's not really anymore a story of a soft landing. It's really about just no landing. Like as in the economy continues to stay
Right.
above trend and doesn't land back to trend. I think that's really because of fiscal stimulus.
Yeah, in fact, saying on the other side of the coin, stimulus could make it harder for the Fed to lower rates. When do you think the Fed will lower rates? How much do you think the Fed will lower rates?
So the probability of the next rate cut is now reduced to about 60% by June. I think if you take a step back, we were like literally up to triple digits for probabilities of rate cuts starting as of March, and then seeing even a rate cut potentially of 50 basis points by May, right? So that's how much it has already been pushed out in the future and changed, just all because of a CPI and report and employment report and the Fed taking on a different communication. I think that all gave us any investor the idea that this Fed doesn't actually have to cut rates at this point. So we're coming down more that this is something more of the latter half of this year. And because the time between the election and then is then really a short window, you probably end up maybe if they can cut or should cut, that it will be one or two cuts possible if they have to. And I think this is the big question into if and
Yeah.
that's I think still open, right? So I mean, should you really cut rates if you have an economy this strong? Probably not.
Well, that right, and that a lot of people are hearing them as they're just waiting on that. That being said, you did say you like healthcare and energy. Just a quick thought on the Magnificent Seven. You mentioned Nvidia briefly. Are any of those names interesting to you? Are any of those names worth putting some money to work in?
Yeah, it's really an amazing group that how they continue to pull each other up. Because they're all linked to each other now through Nvidia's data center revenue. Right? That's what people track, because it's all demand that Microsoft and Google have for Nvidia technology. I also think, by the way, Nicole, to highlight there's an alternative Mac 7, right? Because you have companies like Siemens or IBM or Intel or even Texas Instruments that are investing large amounts of money into semiconductor manufacturing here in the US. They too have started to rally, so we like some of those names as well. And throwing in Adobe that's sort of quasi-linked to this. There's alternatives to Nvidia given the major rally that it's had, but it is a good group, so we do favor the big ones like Microsoft and Apple.
Yeah, good to see you. Ben Emons, New Edge Wealth, thank you so much for
Thank
being
you.
here today on this Monday, kicking off a new week where we get PCE. You mentioned